What's up, guys? Welcome back to Blondes Building Equity, now a top 25 business podcast, which has been really exciting. So, thank you guys for listening. We have a really special guest because we talk so much about the front end of real estate, and we have so many people who are doing the real estate. And today, we heard this guy speak in person at a conference, and we messaged him immediately, and we're like, we got to get him on. I've never heard this strategy, accessing Roth IRAs, and so much that we're going to go into. But we have Greg Herlean. He acts as more of the bank side of the investment. So it's really exciting to have him on. Welcome, Greg.
Thanks for having me. I appreciate it.
So I want you guys to kind of hear a little bit about his strategy. But first, Greg, tell us a little bit about yourself, do a little intro, and how you got into kind of funding real estate.
Sure. So, well, look, going way back, probably 22 years ago, I met somebody who was home on a Wednesday at 2 o'clock cleaning his boat. And I know we all see it on TV. It's like, oh, like whatever you might be watching, but it was like, wasn't raised that way. I never saw my dad at 2 o'clock at home, first of all, ever. And we didn't have a boat. It was always my friend's boat, right? And so this guy was, young guy, businessman, home on a Wednesday at 2 o'clock. I had just more or less dropped out of college, and I was like, whatever he's doing, I want to do that. I didn't know what it was. Thankfully, it wasn't drugs or anything like that, but it happened to be real estate based, and that was my why. I was like, I want to live that lifestyle. And so I can be home with my kids. And that was really and continues to be kind of my big why is spending time with my family and friends and making enough money to be home on a Wednesday anytime or any day of the week at 2 o'clock or anytime. So that was kind of my why, and how I got started it was real estate based, but I learned very quickly that since I had no money, that I was going to have kind of some issues being in the real estate world with no money. And so fast forward a little bit, I learned about what we're going to talk about today, about where money is at and how to get access to it to fund my deals. And that's all I was looking for. I was looking for funding because I was finding deals, but when you find deals with no money, it's pretty tough. And so I learned about this self-directed concept, and so I started syndicating. I didn't know that was even a word. That's what I was doing. I didn't know that's what you called it. But I was syndicating different real estate transactions using other people's retirement funds. And then I got very, very passionate about that, and kind of grew it to what I do now today. That's kind of where I started. My passion is definitely what I said is my family, and experiences. I'm all about experiences, in creating those for my kids and my friends. And so I work hard, but I play just as hard. So yeah.
So when you first got into it, you were finding the deals yourself? You didn't have anyone else like sending you deals or anything?
No, I didn't have anyone sending me deals, but I was around somebody, that gentleman I just told you about, and he was kind of a deal guy. He wasn't giving me any of his deals. I was just kind of watching him, and I literally, when I met him, I said, whatever you're doing, can I work for you? And he was kind of like, maybe, it was a friend of a friend, so it wasn't like a cold
Right.
perspective. But he said, sure. And so he paid me nothing. It was like below minimum wage. And I was doing everything, coffee, running documents, dry cleaning, but I was around him, hearing and seeing what he was doing. And so I was just getting whatever I could. By the way, it wasn't like someone I looked up to after a very short period of time, but I learned a lot from him. And so I was like, after like 6 to 8 months, I was like, I got this. I don't know if I really had it, but I just decided to jump both feet into since I had a little bit, I could find a little bit of money, could find some deals, was building some relationships in the rehab world. And so that's how I got started. But from there, just real quick, what I'll share is I learned kind of maybe the hard way. I think it's the right way is, whoever was lending me money, my syndicators, people with IRAs, they were always making as much money as me, and I was doing all the work. And so
Right.
I knew at some point I wanted to be in that role. I wanted to be the one that was putting up the money, letting someone else find the deal, fix the deal, flip the deal, and I would just get my cut. And so that was my goal. I was always trying to work up to being the bank. And so that's what I did shortly. I wouldn't say shortly. It took me probably 7 or 8 years. So yeah.
So the first deal that you got into, was it like a multifamily? Was it a single family?
Yeah, I'm super probably it's not a sexy conversation. It's not like, hey, my first deal, like you guys probably did a big multifamily or something in California, but no, this was in Vegas $60,000 condo, and I made $4,000 in 90 days. But look, I was 23 at the time, and I thought this was the greatest thing ever. Yeah.
Money, that's huge.
Your first deal, you're winning. That's woo.
Yeah.
I think there's little nuggets in there. We always tell our audience, it's like, if you want to get started, the best thing that you can do is go find someone who's doing it and be like, how can I add value to you just to follow you around and learn from your business? Because that is the best way to dive in, and then learn a little and then just go in. You gotta make that jump, because if you never do it for yourself, you're never gonna learn. But also the other nugget is, we teach our audience a lot. Our first property, we dove in and we went luxury. We were like, we're all in. Right. We're in LA. We're going luxury. And we learned so much from that, because we lost money on a deal, and that really robbed us of so much. And that was so scary. And so we teach our audience all the time. Like, when you say it's not sexy, it was just a condo. No, honestly, when it's your first deal, go for the not sexy, do the $60,000 condo, learn every lesson you can, and then build up to the sexy, because sexy can be scary really fast.
Really quick.
Yeah, 100%. I got to that scary part real quick, but because I thought I could do anything. That after I did a few hundred homes, I was like, oh, I can do apartment complex, I can flip hotels, and but they got scary quick. When when you make mistakes on a hotel, and you're 6 months overdue, and your hard money loan's $70,000 a month, and you're 6 months off, that's a lot of money. And so you learn some hard lessons. And frankly, to me, sexy now is singles and doubles. I don't mind the very conservative stuff that just makes money. To me, that is the sexiest thing out there. So
I want to ask you, for the people that are listening that maybe have a Roth IRA, how do you get started investing with someone like you?
So, well, look, let me preface this. So that's how I got started, and fast forward, after I did that for a long time, using other people's retirement funds and also my own retirement funds, I found a problem in the market, which was trust companies in general had terrible service. And so when I would refer people to, let's say they wanted to invest in my deal with their IRA, I'd refer them to that company, and they were just slow. They took too long, and then and they didn't help with the documentation, and so it made it cumbersome. And so that investor now thought my deal was a bad deal, even though it had nothing to do with me. And so I was like, I've got to fix this. So I actually created a trust company 14 years ago just to fix that problem. Now it's what I do. 90% of what I do is talk and help people set up self-directed IRAs. I only do kind of me and my partners. We do, I'd say 4 to 6 commercial deals, industrial deals every single year on our own with our own money.
I love it.
And so that's what we do on the real estate side. But what I'm probably most passionate about is the self-directed side of showing and teaching people how I got started, what I did, and how I used other people's IRAs, and also how to use today. There's 97 million citizens in the U.S. that have an IRA, and only 4% self-direct. In the 97 million IRAs, that's over $11 trillion. And so my goal is to go out, get a little piece of that, and educate people on showing them their options. They don't have to be in the stock market. They could be doing luxury properties like you're talking about, or commercial properties. And so what I get excited about is teaching people how they can use their retirement account, a Roth, or any kind of, for the most part, any kind of retirement account, move it to a self-directed company like ours. And then what we do is we then show you how to use that money to invest in what you choose and what you want. We don't, I'll never pitch you a deal saying, hey, look, come invest in my deal. Those days are over now. But now I go out, and in most groups, like where we met, there's these communities that are talking about real estate. I think we all know a lot of these different communities, different events. They have, if you go to, listen, even you guys, I mean, you ladies have this whole community around you that there's people that are finding deals and have deal flow all around them. And so it's not hard to find a deal. I think the more important part is if you want to start investing and using retirement money and not paying taxes on your gains, you need to set up a self-directed account. So once your account's set up, now you can invest in whatever you want, whatever comes around at the time. It could be a promissory note, could be a syndication, could be a fund. The list is, it's really endless. But my point, I guess, I get excited about this, is you can set up your retirement account and invest in what you want and not pay taxes. And this is not like a new concept. Or when I say not pay taxes, you can defer your taxes, right? Because at some point you might have to pay taxes on your gains if it's a certain kind, like a traditional retirement account. But if it's a Roth, which you brought up, it grows tax-free in these real estate transactions and comes out tax-free when you go to take it out, which is the most powerful type of retirement account out there.
Can you use that money when it comes out, or do you have to put it back into your Roth IRA account?
Great question. So what you do is, let's say, for example, I were to lend my self-directed Roth to you on a deal. Lend it or partner with you, whatever the terms are. Let's just say I lend it to you. And you're doing a flip on a luxury property. I lend you whatever terms we agree upon. You're going to pay my IRA, let's say 12%. So I give you $100,000, you pay me 12% of my money. Let's say it pays off, you flip the deal, or you get a new loan and you pay off me this loan, this $100,000 from my IRA. And that money plus the interest goes back into my IRA. So my $112,000 is now back in my retirement account, which I then can deploy again into the next deal. So you're right. You can't. That's where I think some people get maybe turned off even, because they're like, oh, because it's funny because there's so many young people that think, oh, this is not for me because when I flip that deal, I can't touch the money. And they're wrong kind of in many levels. But first, you're right. You can't spend it on a vacation. Got it? Or on personal things like that. But you can reinvest it. And so I think that's the most powerful thing when you are compounding. Yeah, I mean, if you're compounding your money and not paying taxes, you and I can invest in the exact same things. Let's say that you and I, the three of us, each put $100,000 in something, and you use your LLC and I use my IRA. Over 10 years, you're going to keep paying taxes. I'm sure you got some write-offs, but you'll pay taxes every year on your gains, and I won't. We'll make the exact same rate of returns, but the difference in 10 years is I'll probably have double the amount than you will, making the same returns only because I'm not paying taxes on the gains.
And I think people forget about a retirement fund in general is that this is your retirement plan, right? And you're now making your money a lot quicker, right? That's the goal with your retirement plan money. So I have so many questions. This is really, really interesting and honestly opening a lot of doors for us as, flippers and real estate investors. Is we can now approach a lot more people for PMI, which is really exciting. But so say, I work a normal 9-to-5 job. I've got a normal retirement fund and I don't know if it's a Roth or a self-directed. What are the next step for people? How would you describe these in simple terms to make sure that they're set up in the right way to be able to lend the money?
Well, look, the first step I would say is, and this is as hard as a sales pitch I'd give anybody, is you probably need a phone call with someone on my team just to look at the account with you. All you need is one of your old statements in the last year. Just pull out one of your old financial statements or print it off. And if you give us a phone call, we'll explain to you what kind of account you currently have. And then we can tell you if you can move it over into a self-directed account with us. And when it comes to us, then you can invest it out. And so a lot of people, I think, make the mistake that say they think they can already invest in real estate when in fact they can't. Like Fidelity now has come up with a self-directed account. Well, it's self-directed in their list of options. It's not truly self-directed. So it's a great marketing ploy. But we'll show you if your account qualifies to move it over. And then if it does, we actually will take 15 minutes with you and help you fill out the application over the phone, and we do it all really for you and then email it to you so you can just sign it, review it, and be done. And again, that was the cumbersome part 15, 20 years ago, is clients wanted to do it and they just say, go to my website and fill out the forms. Well, it's 20 pages, it's confusing, you don't know which boxes to check. We help you with the whole process. So once you're like, hey, look, all you got to do is find the statement. Once you find the statement, then we can look at what kind of account you have and see if it qualifies. And I'll say there's literally probably, I don't know the number, but tens of millions 401k, old 401ks out there. Almost everybody has lost or changed jobs in the last 5 years, which means they have an old 401k that qualifies for self-directing. And just to clarify, self-directing is kind of a descriptive term. It's not a specific kind of IRA. So you can have a self-directed Roth, a self-directed 401k, a self-directed traditional SEP or simple. And we can set up all those type of accounts. Just the biggest difference is you now have control of your retirement money, which is, that's my whole message. That's what you need to be taking over, is be the bank or be the lender, but you make the decisions. I shouldn't make it for you and your accounts. Like these financial advisors who are less educated than you and I are making decisions on your retirement account and getting a fee for it every year. It's crazy.
Where is it typically when you have a retirement fund? I mean, because obviously we're entrepreneurs, we don't have, our real estate is our retirement plan. So this is all mind blowing for us because I don't have a 401k, we don't work a normal job. So it's fascinating. But so normally, where is a 401k invested? Is it in the S&P 500? In mutual funds? Like, where is it normally invested, and what is a normal return on a 401k?
Yeah, no, that's a good question. Look, the traditional marketplace is, and like you said, indexes, the mutual funds, the different stocks, etc. That's traditional marketplace that you see, like, on the news every day. These are in businesses that are publicly traded. That's where people's 401ks are for the most part, bonds, etc. So that's where most people's retirement accounts are. And again, if you have a 401k and it's an old 401k, you can move it over into self-direct, which again, what we do is, or I should say my clients, 75% of my clients invest in real estate with their retirement fund, which you just can't do outside of that. That's the biggest difference. But the example you gave is a good one too. Like, there's a lot of, I meet tons of entrepreneurs who have not set up the retirement account. They think they're too young, or it doesn't make sense for them. But the example you just gave, you can open up with your LLC. We can open up a 401k for you, and you can, like on your next deal, you can contribute up to $50,000 to $60,000 this year, each one of you, into your retirement account. And so what you would do with that money is you then could lend that $50,000 or $60,000 out, like we just talked about, partner with somebody, and when that $50,000 or $60,000 turns into 70, 80, 90, it goes back into your retirement account, but you pay no taxes on that, zero. And so right now, when you get your gains, you get your 50, 60 grand on your next deal, let's say, and you reinvest it and you make money on it again, you're going to pay taxes every time you make money on that 50 or 60 grand. If you put a little bit of money away every single year into your 401ks, because you're business owners, you can avoid paying taxes on a portion of your money. This is not for all your money. Like, we all need to, spend a lot of money on all the fun things we do in life. This is just for a portion of your funds. And that's the message. I'm not here to say this is the end all. And you can invest in the market too.
But if you're doing a cost like depreciation anyway, so say I go and I have 100K and I want to invest into a syndication deal and I do a cost like depreciation, my earnings are tax free. Anyway.
Yeah, look, on certain deals, you absolutely nailed it. There's certain deals and years, by the way, like there's certain assets that you're going to have a complete write-off with depreciation. But there's other assets that you might be buying or investing in that don't get those same benefits. A great example is maybe someone that's wholesaling as well. So if you're wholesaling and you don't get those, you don't get those tax write-offs, right? And so if, let's say that you guys were wholesaling, you ladies, and I wanted to partner with you in wholesale, I could send and partner with my IRA with you in wholesaling, and every deal we flip, our $5,000 turns into $25,000. There's not really any write-offs on that. Now could be other write-offs in the business, like you said, but not to get rid of all of your gains in this example I just gave you. And so therefore, I got lots of investors that invest in wholesaling, and they've turned their $5,000 in their IRA into $40,000, $50,000 or more just in 1 year. And you asked a question about what's the typical stock market returns. Look, hypothetically, typically it's between 8 and 9% of is what people are making in the stock market. But look, last year people lost 15 to 25%, and now it's just funny because yeah. So but now people are excited because they're like, oh hey, it's up 10%. It's like, Well, you just got back 10% of your loss. It's not like people are
Yeah,
like
literally,
celebrating
like,
it.
still down.
Yeah, still down. And so, cut your losses, invest in yourself, invest in what you know, invest in people you know, invest in things you're passionate about. And that's what's fun about this as well. I've had people buy like cattle farms with the retirement account. People have bought in Bitcoin and just different businesses, all kind. Someone bought an ice rink with their IRA. One of the partners of PayPal started PayPal. Peter Thiel, I think you've seen his name. He invested his Roth IRA in a business, PayPal, at $5,000, and it turned into a couple $100 million when he sold it, and he pays zero on taxes, zero, because he did it inside of his Roth. And so you can, I mean, there's
Tax free. At what age do I have to wait till 65? When can I decide that I want to retire with my Roth?
When can you start taking that money and spending it? 59 and a half. 59 and a half. I know that's not a long time for you, but again, this is like this is tomorrow money, but it's a piggy bank for you to invest in what you know, and you're going to invest anyways. So it's like, why not do it in these vehicles?
Right.
And I think it's important for us to be smart entrepreneurs and have a retirement plan too, just in case. And that's what my sister was always saying. It's like, $500 a month or whatever you want to do, just to have a little nest egg, even though real estate is our retirement plan. You want to diversify. I think this is so. If I go right now, because we were talking yesterday, I was like, oh, I want to kind of put $100,000 in my private money lender. To my private money lender, he makes great returns. He takes our money, makes great returns for all of his investors. I know that, So I was like, might be nice. Could I do that put my $100K in the Roth IRA and then go invest in hard money?
Yep, that's what I do. I do most of my investing now. I either partner in deals or mostly lend. I like the lending part, and so what you could do is, depending upon, again, this would be a one-on-one conversation we have with you and any individual, but we find out how much money you made to find out what you paid yourself, so we can open up an account and you can potentially contribute up to $62,000 just per year. So you wouldn't be able to put like $100,000 in there right now in year one, but you'll start with 62. Again, depends on a few variables that we'd find out, and then every year you make contributions. But you can do is you can have 50,000 from your self-directed account and 50,000 personally to make $100,000 investment in this hard money lender with this hard money lender, and then your profits just are split 50-50. Half go to your IRA and half go to you.
Just smart. So if I put in $50K right now, and that was the only contribution I ever made until I was 59, but we kept it in hard money that's giving me a 10% return, tax free, what would I be at?
I gotta think so.
Can I just tell you real quick? You got a minute, and I'll tell you those numbers.
I knew you would know.
All right, so I can't tell you off the top of my head, but give me your age.
26.
Holy cow, so young. All right, 59, so you're 59 years old. Let's say you start with 50,000. Sorry, this is way more fun putting real numbers in. And let's say you contribute nothing ever again, and you make 12% on your money. Okay, so if you put $50,000 in, and you wouldn't pay taxes on it, and you pull it out, it'd be worth $3.2 million. 3.2. And that's with you.
59, like your grandchildren or something.
No,
you're not grandchildren.
I have a feeling you'll still want to spend it. 59 is still going to be young enough that you can still go spend this. But I mean, you just play like if I added one piece of information to this, instead of $50,000, I put in or $50,000. I'm sorry, but let's just say every year I put in $12,000. So $12,000 per year. That's you would have put in over that period of time a total of $400,000, because it's $12,000 a year, and you'd have over $9.2 million. That's real. I mean, 9.2 now. That's probably equivalent. Go ahead.
You have to pay taxes on that.
You wouldn't. Yeah, if you do that in a Roth, you would not ever pay taxes on that ever. And so
you realize the gain.
What's that?
When you realize the sale, the gain of, you don't pay taxes.
Not if if we do that, what we just said in a Roth, you wouldn't ever pay taxes because Well, and the reason why is because you would have already paid taxes on the 50,000 up front today. So you pay the taxes on the 50 grand, it's all paid for, put it in the account, and now it's growing. And by the way, I don't want people. Some people are like, oh, he's wrong on his contributions. I'm not. The reason why I'm not is I'm talking about a special type of 401k, a self-directed 401k that allows you to contribute more than the typical 6,000 or 7,000 per year. There are typically limits. Well, there are not typically. There's always limits. But your typical Roth, you can only put up $6,000 to $7,000 a year. I'm talking about setting up a 401k for each one of you. Your own. If you're a business owner, you can do that, and you can put away up to $62,000. And so yeah, it's powerful. Putting away a couple $1,000 in a Roth, you're not paying taxes ever, even when you pull it out.
So now my question is, we all know real estate can be an amazing asset, but also be scary.
Yeah.
So what happens if we reallocate the funds to a non-responsible party in the real estate industry and they lose?
It's just like picking a bad stock in the stock market. It's like, like right now, you can put your money in the stock market and buy Tesla, right? You're buying Tesla stock, which sounds really good, by the way. But what happens if Elon Musk shows up tomorrow and says he's got another kid with another woman, which happens all the time, right? How he lives is how that stock moves. By the way, I love the guy. But whatever he does in the stock market, we've all seen this, right? Someone says something bad about some kind of brand, and all of a sudden it dies. But it's not a bad brand. Like the owner, did something wrong that day, and it affects. So my long answer to your question is yes. There's always that risk, and so when you're investing in the stock market, when you're investing, which is other businesses and other people, there's the risk. Just like in real estate, you can invest in somebody and they can make a mistake, or the market could drop, right? I mean, there's always risks. My job, and at least in my life, after I've learned from a lot of my mistakes, is to limit those risks. And so I'm not, I'm not having these big up and downs in my portfolio. I'm consistently, and that's why I like lending.
Yeah. And so because, when people come to us after this podcast and they're like, I want to do a self-directed IRA, and we refer them to you, would you also give them potential investment opportunities to direct it to?
Like, I would not, yeah. I won't do that. We don't as a company do that. But again, that's typically not the issue. Most people that are coming to us is because they already are involved in real estate or some kind of community where there's lots of opportunities. Like right now, I'm certain if you said, if I had $100,000 and I didn't know where to go, I could probably go into your community and say, hey, look, I got $100,000 looking to lend. I bet they'd have a million DMs. I've got a deal. They'll have to vet it out, right? But there's so many opportunities and funds, and we know a lot of these big names too that I think we're both friends with that are either online or on TV that we've worked with. They all have different opportunities and funds and businesses. Get to know them and find out, and if you could trust them before you give them $50,000 of your hard-earned money.
Right.
Because I don't know too many that can do 12% annually. Maybe. I guess it would be, unless you're looking at in my syndications, I'm looking at like a 16% IRR, but can you do that with my Roth money, go into a multifamily syndication deal?
Yeah, you can, and we have a lot of people that do it. And look, we 12% is the example you and I just shared. I mean, whatever the number is that make you feel comfortable. There's lots of deals where you'll make 8 to 10%, and those aren't bad deals. If you're consistently making 8 to 10, you're going to beat the stock market, and so you don't need to take a lot of risk. There's tons of deals that are 8 to 10. There's funds that pay a small, dividend and then a big profit at the end. So there's. I see them more than most. Well, I know I do, but I've been to a lot of different events and communities, and there's so many people looking for money, and there's just so many people that have money. So it's the perfect storm. People are always finding deals. As you find deals, people are always looking for new money because they want to do more deals, and so you got to find yourself. We started this conversation with relationships too. Sorry, just one last thing is. It really is all about relationships. I mean, I think is the number one thing in anything you do. And so you're going to have to, find some good relationships who you want to lend with.
Why don't you help just because it's not really worth the time in your business to kind of like bring other
reallocate funds. Why don't you work and do like a fund to fund structure and raise capital for yourself?
There's two reasons. One is the way we are licensed. We're not fiduciaries. We don't want the liability of like if we recommend somebody and then that somebody bankrupts or faults, then we are potentially liable for them, and we don't want to do that due diligence, nor are we licensed to do that.
Right.
As far as our trust company goes, of course I could personally do that, but I don't. And the other big reason is it's about, so we have our own community, our investors that are your investors, and Pace's investors or Ryan Pineda's investors, and so they've got their own deals and funds. And so let's just say that you guys had a fund and you were raising a lot of money, and you referred us over clients. And after you referred us over the clients, I was like, hey, you should invest in their fund or in their deal. And you're like, wait. So people don't like us soliciting their clients and investors for different deals, if that makes sense. And so we're Switzerland. We're neutral. We make sure that you understand how to do it, the documentation to do it. And look, we do give a lot of training and education on your options. So we will talk about investing in a fund or in a multifamily deal or in a wholesale deal or a luxury or an Airbnb. We'll give you lots of examples of what people are doing, but I'm not going to say, here, call Jessica, and unless it's one of your clients, because that's where we see where the lead comes from. And we're like, okay, you don't know where to go. You know what? You should communicate with Jessica, and then they'll reach out to you.
Wow, so smart, because you don't have as much liability.
Oh yeah,
you're just the person that holds it together, and you're like, you go do your connections, and then come back to the bank.
That's right. That's right. And look, we're really good at what we do, and it's all about service for me and speed. So once you know what you want to do, you let us know, and we help you fill the documentation. We get the money out, and so that's what we do. And so our job is to report to the IRS contributions and distributions that are happening in the accounts every year, and just keep good accounting. And that's we started with talking about sexy stuff, but this might bore some people, but it's very exciting to me. And again, it's to me, it's what we talked about is these numbers, that the example you gave me. Like if you start really understanding the power of compounding $50,000 and not paying taxes on it, it's crazy. You'll have double the amount of money by doing the same exact work by not paying taxes.
Right.
Or deferring taxes. Depends on what kind of retirement account you have. Some people get mad at me. They're like, I heard you. That's not true. You're going to pay taxes. It depends on what kind of account you have. If you have a Roth, you're paying taxes up front and never again.
Well, I have another question. Can you take your money out? Let's say I'm like 45 and I need the money. Can you take it out and then you just pay the taxes on it?
So yes, you always can take it out. Yeah, you can always take it out. There's a 10% penalty and you pay taxes. So
right.
so it's basically it's a ding for sure. But we have people that it's an emergency and they don't take out. Realistically, you wouldn't take out all the money. You'd be like, hey, look, I need to pull out $100,000. So you'll just pay taxes on that $100,000 and the penalty. So yeah,
okay.
you can always do that.
That makes sense.
And then if you die, you allocate a person to inherit it.
Mm-hmm. It goes to whoever your beneficiary is, your trust or
tax free, or do I have to put into a trust for it to be tax free, or they inherit it tax free?
They inherit it whatever type of account it is. So if it's a Roth, they'll inherit it as a Roth and won't pay the taxes. If it's a traditional self-directed, they'll inherit it, and when they start taking distributions, they'll pay taxes.
Wow.
This is so interesting.
Yeah, this is mind-blowing. I mean, I really appreciate you coming on because I just love hearing about different opportunities for people to really tap into, because most people have a retirement, fund, or have started to set it up and really want to get into real estate and start dabbling. And maybe it doesn't need to be your entire amount of your retirement fund. You can diversify in the stock market and real estate, but that's always the best thing we recommend for everybody is to diversify your funds. So this is really, I got some people to call right now. I can't wait to be raising money through an IRA. I also need to set up one now. I'm really inspired to do that and potentially put 10 grand every single year and set myself up for a nice retirement. So
Yeah.
do you have any other questions for him? This was incredible.
No, I think it's a lot to digest, but I think you've answered. You seem like you're very prepared in the beginning. You gave us all the correct information. So I don't have any questions because I'm like, oh, okay, you answered it there. So
Yeah.
thank you. We really, really appreciate it.
And if anybody is listening to the call right now and you guys want to get a hold of Greg, find him on social media. We'll link all that stuff below because I'm sure a lot of you guys are interested and he can help you set up the self-directed, answer any questions, I'm sure.
Wow. Okay. Thank you so much. We really, really appreciate it.
Thanks for having me.
Thank you guys for listening. Like always, make sure you guys like, subscribe, add this to your save on all of your favorite Spotify, YouTube, everything so that you guys can hear us next week. This was Blondes Building Equity with Greg Herlean, and he was incredible. So thank you guys so much for listening, and we will see you next week.
Thank you.